Robbie Wilson, Remote Trading Room LLC. Happy Monday. I just wanted to follow up on this crude that back in the middle of July we called, I did with my proprietary work along with the team, around $74. You've seen the other videos, but now this is a daily chart. So we've gone into each candle represents the open, high, low, close of that day. And we've been going back into time on the weekly and 20 years on how we got to this point. This is called funneling in. And you can see right here, this is an uptrend going into this level right here at 86. And we were at 88 when we did crude oil 2. So here's what's happening. And I haven't explained this before. These price levels are my proprietary work, and they're in color for a reason. When it's hot pink, it means the asset is going to get hot, and it does. So we get over here, and you can see on the 25th or 24th of July, right, when I say crude oil peaks, typically between the 4th and the 7th of July. This is what's happened because of the supply and everything that we've talked about. And I'll go into one more after this. We've rallied up. We come down to the 5,200-day moving average. And this is called the golden cross. This is a 50-day moving average, 50-day. This is the 200-day, 200-day moving average. When the 50 crosses through the 200, that's called a golden cross. That's also very bullish. So all the technical signs. I mentioned in my last video, and it was longer term duration, that once we hit, and this is the 91.34 by 91.52 that I called back in the middle of July. I said, once it gets above this, typically we'll pull back. Well, we're at 91.71 as we speak in real time at 6:12 a.m. on the 18th of September. When I talked about the 87 level, this is equalization on a short term. And the imbalance of that order flow will usually go to the trend side, which is up. It has. I want to come down into here. We've talked about the RSI, the relative strength. So 70 is overbought, and if you remember, 30 is oversold. I mentioned we were getting way overbought, and we typically pull back. So I'm going to go back in here. We probably will pull back into this area because we're just getting overbought. And you can see where we've come from. 63, 64, back at May 4th. This is an incredible move, and it continues. And so I want to do one more thing here. I'm going to change this, and I'm going to go to this. This is petroleum and other liquids. This includes distillate fuel, and in other words, jet fuel, heating oil, and all of this. These are weekly U.S. ending stocks of distillate fuel going back to 1980. I'm going to go all the way to present. That's all we need to do here. This does have, it's not in real time. So it says week of 9/8. So it's about 10. It's the only thing that we show you that's not in real time because we can't get it in the form that I wanted. So at the end of the day, this last week, diesel inventories were down 11%. So this just goes to show you another form of what I'm talking about as far as supply problems. And this is the EIA, and that'll be all for now. And then I'm going to have a snapshot of what happened over the weekend, and this is just week over week at the pump with unleaded gas and diesel. And I hope you have a great week. Again, there will be some other commodities coming up with Mr. Hauge, and another artificial intelligence that's very important with Mr. Keefe. Thank you. Have a fantastic Monday, and we'll be back shortly in a couple days.